Hello, class, and welcome to our fifth lecture series on managerial accounting. And I'm your instructor Jamal Haider. Okay, let's revise from our previous lecture. We left at revising our T accounts entries, our journal entries regarding cost flow in job orders cost system. So let's just revise a little bit, and then we talk about our in-class participation activity, and then we see and resolve its entries, class participation, and then we move on to our today's agenda. And I hope that we will be finishing this chapter today, and we would be having our assignment 2 as well. Okay, let's talk about this. Our learning objective, that is understand the flow of cost in job order cost system and prepare appropriate journal entries to record the costs. So let's talk about this. First, so we already know that first we make a journal entry, and then that journal entry go to the T accounts. From T accounts, the flow of accounting data is like that. The journal entries, and then T accounts, from T accounts to trial balance to income statement, then balance sheet. No, income statement, then retained earnings statement, and then balance sheet. And then the last one is the cash flow statement. Okay, but our agenda here is just to understand the journal entries and to put those journal entry into ledger or T account. So let's just talk about this. The number one is, let's just first revise the rules. So rules are that, so can you repeat what is the accounting equation? Can you recall that? Assets is equal to liabilities plus honors equity. Well done. Let me just set aside the controls here so that I can write better. Here we go. Assets is equal to plus honors equity or shareholder equity. It's one and the same thing. I think my screen is something, is touch. It's like, okay. So what you understand here, this is assets, this is liability, this is honors equity. Okay. So assets include current assets and fixed assets, right? Liabilities include both current liabilities and long-term liabilities. And honors equity includes retained earning and common stock, right? So I'm not going into that one, just regarding the journal entry rules, and that is, if asset increase means debit, if asset decrease, credit, right? So if cash increase, entry, the rule is it would be debited. And sorry, and regarding the T accounts, so its right hand side is called credit, left hand side is called debit, right? And here you write down the account title, right? So if assets increase, debit; asset decrease, credit. Liability increase, because this is the other side of the equation, so it will be reverse. Liability increase, it's mean, can I just write down? No. If it's increase, credit. If it's decrease, come on, debit. Amazing. I think my touch is not responding properly. So let me use the mouse here. Similarly with the honors equity increase, credit, honors equity decrease, debit. Right? And what are the rules for journal entry? We pronounce from debit, and then we pronounce to, and then credit. Right? So if cash received from the customers, cash is coming into the business as cash is asset. Asset increase, it means cash is increasing. So cash, which means debit. And from customers means customer is now paying us money. So we decrease the customer, which is accounts receivable. Asset decrease, credit. How we make the entry? Cash to account receivable. And how we speak the entry, how we pronounce the entry? Cash to account receivable. It means cash is debited to receivable. Whenever we use to receivable, it means it is credited, right? And how we write it like this. First we write debit and then we write credit. And how we speak or how we pronounce it, cash to account receivable. So that is just a revision, recall. So if asset increase, debit, asset decrease, credit. If liability increase, credit, liability decrease, debit. If honors equity increase, credit. If honors equity decrease, debit. Right? And about regarding the expense, we talked about the expense. Expense increase, debit. Expense decrease, credit. Normally expense are not decreased, they always increases. So they are always added. So expense always debited. Right? Okay, and sale increase mean also credit because sales is a part of honors equity. Sale increase, credit. Expenses are also a part of honors equity because expenses decreases the honors equity. That's why expenses increase mean decrease in honors equity. Decrease in honor equity means debit. Understand? So expense increase means decrease in honor equity, which is debit. Or you can just remember that any kind of expense always, if an expense incurred, always debited. Okay, so let's go back to our entries, how to make that. So remember, so are we clear on the topic of applied and actual manufacturing overhead? Right? Chandra, Christine, Min, Arone, right? So we basically first use applied overhead on the basis of some, some cost drivers. Okay, we will be charging our manufacturing overhead on the basis of labor hours, machine hours, right? This kind of stuff. So we charge in advance all the stuff. Okay, now let's talk about this. So first, we purchase and issue the raw material. So when raw material is purchased, what would be the entry? Raw material is purchased on account. Raw material is our asset, or you can say the inventory, because we talked about the inventory as three kinds: raw material, work in progress, finished goods. Understand? So this is the part of inventory, right? So inventory have three kinds, because we are talking about now factory accounting, right? So in inventory have three kinds: raw material, work in progress, and finished goods. So we purchase raw material. So raw material inventory belongs to, or raw material belongs to asset. Asset increase, debit. So on account mean we are paying later. So that's why we create liability, accounts payable, which is supplier. So debit to credit entry would be raw material to accounts payable, right? This is we purchased it. Okay, when the material is issued from raw material warehouse to factory operations, right? Then what happened? Two things are going to be, happening over there. So let's talk about the cost flow. So raw material is issued to factory production to make unfinished, to convert those goods into finished goods, right? So they are processing the raw material and converting that into finished goods, right? So material is going to the factory, and some material is also going to the manufacturing overhead as indirect material, like grease, like that cannot be traced easily. So we call this, indirect, and that will go to the manufacturing overhead, right? So it means from raw material, when when inventory is raw material inventory is going from raw material account to work in progress, it means raw material is decreases, and on the other hand work in progress inventory increases, right? Similarly, raw material is also going to manufacturing overhead, which is expense. Expense is increasing, it means debit, right? So the entry would be work in progress, manufacturing overhead to raw material. Understand? Chandra, Min, Arone, Christine?
Yeah.
Right? So the entry would be like direct material issued to job or as work in progress, and sorry, this is just the explanation of the entry. So the entry would be that material is issued uh, from raw material, issued to factory to make work in progress, and to manufacturing overhead, or indirect materials is also issued from raw material. So it means part of raw material is going out to be converted into finished goods, and part of material which we cannot trace directly will go to manufacturing overhead. Manufacturing overhead is our asset, is our expense. Expense increase debit, so that's why manufacturing overhead is debited. Work in progress is our inventory, second kind of inventory, right? So material is going to the work in progress. Work in progress increased. Increase mean debit. So entry would be 2 debited, 1 credit. Work in progress, manufacturing overhead, 2 raw material.